So one thing, obviously, I want to quickly talk about is the election. Obviously, I'm sure everybody's aware that Donald Trump is the president-elect. Andrew mentioned it just briefly. Markets did kind of overreact last night. They're down about 800 points, and then they bounced back this morning. This is likely going to just be a short-term reaction. We'll probably have some short-term volatility, and we'll end up back where we started. But we did see a tremendous movement in the Dow Jones and also the U.S. dollar, but that has been muted even by this morning. One thing that does present some unknowns is obviously the long-term consequences for agriculture. There's neither candidate really had much of an ag platform that you could really make some analysis on. But two of the most important things for me moving forward is obviously trade policy. We export 15% of the corn that we produce in the U.S. We export 47% of the soybeans. So trade policy for agriculture is going to be very important. TPP and TTIP, the two trade deals that Obama's been negotiating, those are going to be dead. Now, what emerges after that, I think there will be some trade negotiations that do occur, but that is a huge unknown right now. But that is something that will be very important for price direction for agricultural products. The other one, and this one I believe has even more unknowns to it, is the regulatory environment. Obviously, there's going to be a potential pullback on some of the regulations. Now, what that exactly looks like, I have absolutely no idea. We'll have to see as information does end up coming out. But in general, that could potentially lift some of the environmental regulations that producers are finding somewhat prohibitive to their operations. The other big one that is a huge unknown is the mergers and acquisitions. Obviously, with all these mergers in the works, having a new president with some new ideas, I'm not sure how that's going to end up affecting these mergers and acquisitions between, say, Syngenta and ChemChina and Monsanto and Bayer and some of these large seed and chemical companies, as well as the fertilizer companies that are potentially looking at merging. So again, those are a couple of things to look at. Again, I'm not a political expert, so I think there's just a lot of unknown right now. Again, the markets are probably going to have a bit of short-term volatility, but until we get some more details, I think that's just going to be short-term noise, and will kind of even out as we move forward. This is just, I pulled these last night. I was obviously watching the election. This is kind of highlighting what Andrew was talking about just briefly. We've seen that tremendous drop in the Dow Jones, which is this upper left-hand corner, drop from, or this is the U.S. dollar index, sorry, dropped down about just over 2 points. Dow Jones was down, but it's already bounced back up. So again, I think we'll get back up to where we were. It's just a question of how quickly it takes to have some of this short-term volatility get ironed out. If you look at what happened with corn and soybeans, we've seen a mild decline in corn, about 5 cents last night. But again, we were up and we're still trading higher than we were a couple of days ago on that. Soybeans, obviously soybeans, given its reliance on trade, has come down a little bit more. But again, I think this is still just short-term noise. I wouldn't read too much into it. We have to wait until more information is revealed on what the policies are going to be before we can really tell if there's a true impact on the market. So what I want to do quickly is just talk quickly about corn, global supply and demand. Obviously, we've had stocks building over the last 4 years. We're estimated to end up having over 2 billion bushel carryover in the U.S., with global carryover of over 8 billion bushels. So we have a tremendous amount of stocks of corn out there. One thing that is interesting, if you look at the global number, we've seen that somewhat flatten out the last 2 years. So I think we are seeing kind of a stabilization in prices, at least for now. They're probably not at the levels a lot of people are hoping, but at least we're kind of seeing those stocks so that they're not going up as much as they have in the last or the previous 2 years. Now, one thing that is positive is stocks are building, but so is use. So if we look at adjusting those stocks for use, and this is just a very simple measure that essentially indicates if you end up having total consumption in the U.S., for example, divided by total stocks, how much, or divided by 365, and then dividing stocks by that number, so it's basically a daily consumption level. What we've seen is we've seen stocks move completely sideways on the global scale, but we have seen them continue up domestically. We did see that production disruption down in Brazil and other South American areas. So again, that's kind of stabilized a little bit. So again, I think we've kind of put the bottom in for this marketing year, but I don't see a ton of necessary upside potential on corn. If we look at futures prices, again, I think this is one where it's important to take a look at some of the opportunities we've had in the past years. Obviously, hindsight is 2020 when you're looking at pricing opportunities, but we have seen those in-season pricing opportunities where corn prices have been above $4. Now, they haven't lasted very long in 2015 and 2016, but hopefully we had some take advantage of pricing some product in those time periods. Obviously, it's a very counterintuitive decision at that point in the year. If you remember, in June of 2016 and July of 2016, we had some major potential production concerns that precipitated this increase in prices. So again, to try to pull the trigger when it looks like it's getting hot and dry in the corn belt and prices might be on the move up can be very difficult. But I think this highlights why we need to end up making sure we know where our cost of production is and where our yield variability is, so that we can make sure that we remove some of that emotion from our marketing decisions. Again, I think as we move into the winter here, we will see a bit of a price appreciation similar to what we've had in past years. Again, there can be some disruptions, but I think we will see some additional price appreciation in the futures markets. So just a quick summary: we still have abundant supplies with strong export and domestic demand, but we need that global economy to continue to grow. Right now in corn, I think we have limited price upside without a supply disruption. So obviously the South American countries are entering their planting season. So again, I think that's something to keep a watch on. You look at cash prices through the winter, we're probably looking somewhere between that 330 to 410. I'm going to talk a little bit about basis for some opportunities within Tennessee at the end of the presentation, so I'll talk a little bit about that. And currently right now, 2017 prices are currently favoring an increase in soybean and maybe cotton in some of our western counties and potentially in some of our southern middle Tennessee counties. We look at soybeans, again, similar stocks position where we've seen some increases. Where we have seen a difference is, again, if we adjust those stocks for use, what we've actually seen is soybeans come down from the high in 2014 as far as a stocks to use relative indicator. So again, this days on hand, if you look at 2011, we had roughly 20 days on hand. Right now we have about 35 in the U.S., so that's went up. But on the global side, we've went up to a high of 95 in 2014, so 95 days of stocks on hand. If we kept consistent consumption, we've dropped back down to 86. So that's a positive for prices. Just to show that we're not just cherry picking one of the three commodities that are traded. This is soybean meal and soybean oil, and you can see a tremendous decrease in the amount of stocks that are held for oil since 2010. If you look at soybean meal, which to me is more important right now, that's going to end up stimulate some additional crushing. If you talk to soybean crushers, they will tell you that meal prices is typically going to drive whether they're increasing their crush or decreasing their crush. Soybean oil, yes, it's a high value product, but it's typically not going to trigger that crushing decision. So that's something to keep in mind. I think what it does is it indicates that we are still probably going to see some volatility in the soybean complex. We're probably going to end up seeing a little bit of price appreciation, or at least have the potential for some price appreciation. Again, you look at soybean prices, we got that big spike back in May and June where we were above $11. Since then we've come down, but we've been on the march again here as we enter the fall for a variety of reasons. If we look at kind of a price range, I think there's a tremendous amount of volatility that is still out there. A lot of it is contingent on what happens down in South America. Obviously, Brazil is kind of on the same production level as us as far as quantity goes, and they're a tremendous export rival or competitor. So when they're planting their record acreage this fall, as we move through this growing season for South America, I think we'll remove some of that production uncertainty. But as of right now, I think there's a wide range of prices that can be easily estimated or easily materialized down the road. So having a 920 to 1125, I know that's a big range, but I think there's a tremendous amount of uncertainty within soybeans right now that could push prices higher or lower than where we are right now. Because right now we're just right at that $10 level on the nearby. So again, I think there's forces that could move it up over 11. I think there's forces that could move it down closer to that 9 range. So again, we need to be careful in what we're doing with soybeans. If you can make money selling beans around that 10, 20 range, boy, I'd be tempted to end up letting those go, because there is some significant downside risk, but also upside potential. So again, it depends on how much you want to roll the dice on soybeans. Right now, 2017 for the U.S. domestic plantings is favoring soybeans, but as I mentioned, that's going to be completely, or could potentially be completely turned on its head depending on what happens in Brazil and Argentina. If we look at where futures spreads are right now, I updated this last night, but you can see the different corn contracts December 2016 through December 2017. What I ended up doing is just calculating a quick spread. So this is the March minus the December, or the December minus the December. So a 38-cent carry from December to December, and then I translate it into the number of months. You can see obviously what the monthly futures market is offering as far as a price premium for the deferred months. Soybeans, it kind of gets turned on its head a little bit as you move further out. Again, I think that factors into the relative prices favoring additional soybean planting. Soybeans have been a real difficult animal to predict. Demand has been incredible for a lot of soybean products. So again, it's something where yes, there's some good prices right now, but there's a lot of uncertainty. Is where do we continue to see that increasing demand, or do we plateau? And I think you can make a strong argument for both of those. Obviously, when you're talking about soybeans, you're talking about China, and trying to get a good handle on what's happening both on the economic side and then also on the policy side in China can be tremendously difficult. Now, one thing that most are reasonably certain on is the fact that we will continue to see strong demand. The question is that going to be increasing, or are we just going to kind of stabilize? Given the emerging middle class and the demand for feed for their livestock, I think that'll be another one where we'll end up having reasonably strong demand. The question is, does it exceed expectations, or does it just kind of plateau and meet where USDA is projecting right now? Looking at Tennessee, these are Tennessee average monthly prices across regions. So again, you can see corn has just dipped down below $4. Again, that's a seasonal price tendency. Soybeans are just below 10. I'll get into some of the basis implications here shortly. But one thing I do want to point out, and this is what's kind of driving the basis, so there's a difference right now between how our local cash prices have been reacting versus what's been going on in the futures market. So again, if you look at the U.S. drought monitor, obviously the southeast has been hit the hardest this year. We still have some persistent drought in California, but obviously for the purposes of our discussion on both the livestock side and on the crop side, this drought has some tremendous implications for how we should end up approaching our marketing and our risk management. So one thing that is a little different, obviously we're going to have an impact on basis, and basis is the difference between that local cash price and what the Chicago board is trading at. This basis difference is going to be very different from the drought of 2012 because this is a regional drought. This is not a national drought. If you looked back at that previous map, if you look at the Corn Belt and some of these new emerging northern corn and soybean states, these states had, for the most part, very good growing conditions. Now, it's going to be sporadic still at times as far as yield goes, but overall, we're projecting record yields, record national yields for both corn and soybeans. So that's the supply side on that is going to be very different. Now, locally, when you look down in Tennessee, northern Mississippi, northern Alabama, Georgia, and into North and South Carolina, there's a lot more yield variability. I don't have to tell a lot of the people down in that southern middle portion. I've talked to county agents down there where they've harvested anything from 65 bushels to upwards of 200 bushels. Again, that yield variability, but we are seeing production that's going to be lower than where we have been the past years for Tennessee. So that is going to provide some potential opportunities in the cash markets to end up marketing corn in particular. So again, we can take advantage of some storage opportunities if we do have corn in storage right now. If you look at basis right now, this is again a measure of the cash minus the futures. This is average basis for the five reported regions. If you look from January through August, we had lower basis than the 3-year average. But if you look at as we entered that harvest time period, our basis is actually stronger. Now it's still negative, but it's about 10 to 12 cents stronger on average. And this gets amplified where you have more of a drought impact. So if you go down into lower middle Tennessee and some parts of western Tennessee, you're going to see a stronger basis than we'll typically have. So what that indicates is even though we have lower futures prices on the corn side, the actual cash price is probably going to end up being increased a little bit just from a local basis. Now, if you look at this again, what we've seen on the futures side is that we've started moving sideways. We had that price appreciation after we made our seasonal low, and now we've started moving sideways. I still think that we'll probably see in the futures another little minor increase up into this 370, 380 on the future side. But again, what we'll see is some short-term noise, but I think we'll end up having a longer-term uptrend in corn markets where we'll get up into that 370 to 380 range. You look at soybeans, again, soybean base has been incredibly sporadic. The one thing that we have to remember with soybeans is in Tennessee we have no state-level crushing capacity, so all of our soybeans are going out of the state. Most of those are going out through either a barge point or down south to Decatur or Guntersville. So again, what we're looking at here is there going to be the same basis opportunities in soybeans? Probably not. There could be a little bit down in southern middle, but again, I think this is something where there is a difference between corn and soybeans. You look at futures, again, we had that big price spike back in June, July. We set a bottom in early August, and we've been able to maintain that bottom, and now we've seen some price appreciation. Again, I think we're going to see that continued volatility in soybeans. There's strong arguments that can be made for increased prices, but also strong arguments to be made if South America produces a record crop that we could see it drop back down. So again, we're really going to have to wait and see what happens with the South American crop. before we can really get a good handle on what opportunities are going to be available for the 2017 crop.